All right, welcome everybody. Welcome to another episode. This is episode 6 of the show, and I'm here again with Jason Meyers, the lead architect of Auditchain. And today we've got an exciting episode to talk about the SEC's clawback rules. Jason, I'm going to need you to make this really easy for us to understand. What is the impact of these new rules?
It's trick or treat. It's Halloween. So here's the trick. The SEC is going to take the money from executives who filed financial statements that contained erroneous information. Here's the treat. Taxpayers and investors benefit from an increase in the integrity and reliability of that information. Very simple.
Is this something that happens quite often? So I'm assuming that them having to make this rule implies that it is something that happens quite often. Like, what's the scenario?
So our product manager sends a quarterly email tirade to every regulator on the planet, questioning how such poor quality can be filed and accepted with their agency. So what he does is he takes every single financial report filed with the SEC after a period. He identifies who the vendors were, whose software created those financial reports. He then illustrates how many of them contain errors. Of the ones that contain errors, what percentage have more than one error, and what the substance and nature of those errors are. Right? This is what Charlie does all day long, right? So we estimate, based upon our rules, that approximately 20% of all information filed in financial statements with the SEC is not consistent. 20%. So what does that mean? Well, let's look at this from a socioeconomic perspective, shall we?
Let's.
Okay, so central banks set monetary policy. Well, what information do they rely on to set monetary policy? Well, they rely on a lot of information. They rely on a lot of information.
Right.
A lot of that information means, economic statistics published by government agencies, right?
Okay.
Government agencies rely in part on financial statement data from the world's corporations, particularly in the United States, right? So now let's look at the prescription with which government agencies prescribe the specifications on how to articulate and express financial state. We happen to know that the taxonomies created and published by government agencies, regulatory agencies, contain flaws, which means that report models contain flaws, which means the financial reports themselves contain flaws, because software is built to the specifications of government and regulatory prescribed financial reporting schemes, which are iterated in financial reporting taxonomies, like the US GAAP taxonomy, or the IFRS taxonomy, or the UK GAAP taxonomy, and so on and so on and so forth. Right?
So this is huge. I mean, if you're saying 20% potential, issues, inaccuracies, or inconsistencies, and policy is being set in part by looking at this data, what do you think the impact could be?
Want to know what the impact is?
What is it?
Chancellor on brink of second bailout for banks. January 3rd, 2009. The Genesis block of the Bitcoin blockchain referred to that headline which was published by the UK Times. That's the impact.
For those who are not aware of said article, what do they mean by that? What does that mean?
That was in the inscription of the Genesis block of the Bitcoin blockchain, which was launched on January 3rd, 2009. That's our New Year's Day.
Yeah.
Right? It referred to an article that illustrated basically how the centralized fractional reserve banking systems around the world have failed society.
Yeah.
Right?
Yeah. 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 So so the SEC sets these new rules. If they haven't been catching these errors going forward, how are they going to, what sort of technology are they going to need? Or is it the reporting companies who are going to need technology that ensures that they're not submitting a report that is inconsistent?
That's a really good question, right? So these taxonomies are created by government agencies with the help of accountants, technical accountants, right? What Auditchain does is not only do we prove the flaws in a taxonomy, we correct them. So the software used to create financial reports by economic entities contains corrected taxonomies, which means corrected report models, and 6 additional categories of rules that get checked. Because right now, nobody cares about anything more than passing the Edgar filing manual rules in the United States and the ESMA filing manual rules in Europe, right?
Right.
Which are syntactical, pretty much, right?
Yeah.
So in our case, we verify, our protocol verifies, it externally validates compliance with fundamental accounting concepts, right?
Yeah.
And other inconsistencies that go unchecked because the industry's not prepared for it. Now, there'll be proponents in the industry that say, well, nobody cares about it. Well, that's the problem. Nobody cares about anything except passing the Edgar
until there's like a big issue.
No, there's always big issues. There's always big issues. The United Kingdom, for instance, has suffered from more accounting frauds than any other jurisdiction on the planet. They lost their largest government contractor. They lost, Valerie Patisserie was the straw that
kind of
broke the camel's back, right? Because, everybody needs to eat pastries before they walk into Parliament. And Thomas Cook, large
scandal after scandal.
Large swaths of their labor force are gone, right? And large chunks of their pension schemes are gone because of the failures of these companies, which were under the watch of the audit profession, who is supposed to detect these things. The problem is there's only 4 validators on that blockchain. You understand what that means?
I do.
Yeah, so there's only 4 auditors that tentatively and conditionally validate the integrity and reliability of the information asserted by the management of these organizations.
And how are these 4 incentivized?
All of them are vying for an increase in stock prices because they all have stock options.
Yeah.
Right?
I think we should show, are you able to demonstrate a potential, a report being submitted and analyzed for these inconsistencies?
Trick or treat. Trick or treat. Sure. Yeah. Want to see it?
Sorry for the setup, guys. It's obvious. So what are we going to see, Jason?
What are we going to see? You're going to see a horror show. It's Halloween. What do you think you're going to see? Can everybody see that?
Yeah.
So this is an interface used by our development team and product management team that contains every single data point exposed. So don't judge the interface. what you should judge is the data output. Now, to put this very simply, red is bad, green is good, right?
Okay.
And so you'll have some statistics here. I'm going to see if I can enlarge this so everybody can see, right? So look at these things. Calculations, well, that's self-explanatory, right?
Yeah.
You have 52 that have been defined, right? 74 have been bound. None are derived. 56 of them were okay, but 18 calculations failed. So what does this all mean? Well, let's go to the videotape, right? The famous,
Yeah.
I just dated myself. So this is a list of all of the rules that are inconsistent. So
Okay.
violation of various different rules, some of which are fundamental accounting concepts. Look, some of which might be stupid errors like a the wrong polarity on a number. But the wrong polarity on a number might turn 3 billion in debt into 3 billion in equity, right? So here's a fundamental accounting concept consistency check, which passed, right? Green is good, red is bad. So let's go down to
the fails.
Yeah. Now, I just want to say something. We're not out to attack any company. We're out to improve the integrity and reliability of the world's business and financial information. So if the CFO or controller of Tesla or Elon Musk sees this, we tried reaching out to your CFO multiple times. We were ignored because we needed help, because we're developing software. We wanted to see what your thoughts were about what was discovered, okay? So what are you doing instead? We had to call a bunch of auditors and the CEO of the largest standard setter in the world for financial reporting, all of whom took 4 days to corroborate what it took Pacioli 30 seconds to output. Okay?
So this is a public report that Tesla has submitted.
This is Q1 2021 for Tesla, okay?
And it had significant amount of errors.
Yeah, it did. So, but look, I also want to qualify that it is the software vendors that build the software that's used to create these reports who are also at fault, and they're actually not at fault. The prescription by government agencies is flawed, okay? So let's look at, there's one here that's going to be interesting because here we are. Here we are. This rule has to do with a calculation, okay?
Okay.
It is the US GAAP rule that governs the net, it's a cash flow item, right? On a cash flow statement. So this component, particular component, net cash provided by or used in financing activities, right? Which is your consolidated statements of cash flow. Now it says unaudited, but every Q is reviewed. In the United States, the auditor does not review the machine readable XBRL instance document, which is what gets filed with regulators and is what's supposed to be relied upon by the world's investors, right? So let's go there.
And are these calculations sort of standardized?
Yeah, they are.
So they're basically saying the math is wrong on this particular.
So let's go to this one instance with all this red here, okay? So the net cash provided by or used in operating activities was $1,641,000,000. That's a big number, right?
Yeah.
Profit and loss was 464 million, right?
Yeah.
Depreciation, amortization, and impairment, 621 million, right? Share-based compensation, 614 million, right? Let's go down. I'm not going to read all this because this is boring to a lot of people until they realize how it impacts their lives, right? So when all these companies report all this erroneous information and the world acts upon it, you're allocating capital and making monetary policy decisions, publishing economic statistics based on flawed information. Flawed information. Hold on one second. Foreign currency transaction gain loss realized.
And how many, you said they had how many of these incorrect calculations?
I don't know. I have to go back and it's stated. There's a lot of them. But look at the difference here. It's $1,940,000,000. That's a lot of money.
Insane. That's insane.
Hold on. What I want to illustrate is what Pacioli proved was this was the quarter that Tesla purchased Bitcoin. Remember the $1.5 billion in Bitcoin?
Yes.
Here we are. Statement of consolidated balance sheets unaudited. So here's a balance sheet item that contains 3 separate instances of inconsistencies, right? You've got instances surrounding their leasing, right?
Yeah. Plant equipment.
Right. Their assets, which they state as $1,331,000,000, that's the Bitcoin, right? Digital assets, non-current. You see that? Now, why is it non-current? Because up until last week, Bitcoin was treated as an intangible asset. That's not a current asset.
Right.
Cash is a current asset,
right?
Bonds are current assets. Short-term debt instruments are current assets. Anything that is usually immediately convertible into cash is a current asset, right?
Right.
So, hold on a second here. But look at the difference. 4,709,000,000 is the difference in this particular instance and in this particular instance, right?
That when you say like define difference,
the difference,
like they're not accounting for that amount of money, or
the difference in the calculation was 4,749,000,000.
Wow,
That's the
that's
difference.
massive.
Right? So I know there was another instance here that also illustrated the $272 million worth of Bitcoin that was sold in that period. The application of the accounting rules they used was not consistent with US GAAP, with generally accepted accounting principles. So this is just a very, this is one instance of,
That's pretty, I mean, I think I would, obviously as a CFO, I would want to know that, but as
well, you're the one signing.
Investor, I would also want, an investor, I'd also want to know.
That's right, because CFAs at BlackRock and the world's institutions that base their thesis on corporate performance are allocating capital based on flawed information, right?
But
taxpayers are shouldering the burden.
Yeah.
As we slalom our way through crisis to crisis, right?
What does the disclosure check mean? Because it's looked like they failed on 34 of those.
Yeah, it's a disclosure checklist, meaning the number of disclosures that are defined and bound, right? And the number of failures, the way they made a disclosure of something. For instance, these are disclosures. All these red marks are disclosures, right? So, this is what Pacioli outputs, right? You can spend days looking at a single analysis from a single financial report that Pacioli analyzes and outputs. And if you really,
Actually, only could do the
if you
analysis.
really want to know, if you want to know more about the details of this, we are in the middle of testing right now. So if you want to know more, you should join our testing cohort,
Yeah,
run a Pacioli node, and participate with us.
absolutely. Um, can we bookend that demo with you actually showing like the submission of a, or like the uploading of a report?
Yeah, anyone can look at that right now by participating. You can submit a report right now on our test net, in our test pilot that's literally underway right this second.
Excellent.
And if
So
anybody wants to know the date, this was recorded on Halloween, right?
Yeah.
October 31st, 2022. And we're subjecting this software to a battery of tests in which there are a variety of participants ranging from people who are interested to accountants and professionals who want to use this, who want to act on the protocol.
Yeah, and perhaps some CFOs who have had reports with some errors might want to also test it.
Well, so the obvious question that you might ask would be, so how are companies going to correct all this information, right?
Yeah.
Well, you can't correct it using existing software because the existing software doesn't meet these types of specifications, right?
Yes.
So we're launching the ability to create financial reports based on improved and corrected taxonomies and report models with a whole host of categories of rules that don't exist in other software, right? And it's Web3 based. And so what does that mean? Well, each one of these named rules that we use to detect these inconsistencies is represented by an NFT. So if you're an accountant or an auditor and you've got rules that you think that can improve the quality of the information or the ability to verify that information, right? What we've built is a platform that combines the semantic web, the standards set under WC3, which
Yeah.
is XML and namespaces, right? With Web3, which is connecting with a wallet, downloading the instance to your browser, having rules that are namespaces in Web2 or the semantic web represented by NFTs, which is Web3. So every time your rule that you created gets used, you get paid a royalty. I mean, I don't really know any other way to increase the integrity and reliability of not only the processes that are used to articulate and express financial state, but the quality of the information and the reliability and the integrity of the information that's outputted.
Yeah.
Right. And that's what we're all about.
And to connect the dots back to the SEC clawback is they've set a rule that for some companies, they have no other way other than trying to use Auditchain to detect whether they have these inconsistencies.
Well,
right.
I'm sure there's another way. I just don't know what it is. But we've been at this for 6 years almost. So the guy, our product manager invented XBRL, which is how you communicate business and financial information to your regulators. It's a machine readable syntax, a semantic layer that the world uses now. And right now it's in very, very bad shape. And we pay for it. How do we pay for it? An increase in taxes as a result of, budget allocation that goes to regulatory agencies. The other way we pay for it is through monetary debasement, right? Because we continually print money to fill in the gaps associated with, really all boils down to information relied upon by government agencies who publish economic statistics, which is in turn relied upon by central banks to set monetary policy. And that, my friends, is why the chancellor was on the brink of a second bailout for banks. You give keys to the candy store to a bunch of children, they're going to eat all the candy. That's what kids do. But when there's adults in the room that don't say anything, we end up paying for it.
And on that note, I think we'll bring this episode to a close. Thanks so much, Jason, for explaining that. And we will be back with another episode next week. And I'd love to hear your comments. If you're watching us on YouTube, please do comment. If you're listening to us, thank you. And on the audio platforms, thanks for listening and share this episode. And if you'd like to join us on this journey, visit auditchain.finance, and we'll get you started in participating and testing this protocol.
Happy Halloween.
Thanks, Jason.